So hello everybody and welcome to this episode of CFO 4.0. So a bit of a different topic for you today. So today we're going to talk about the process of going to IPO. And to help us through this conversation with me on the podcast today, I have Scott Buchanan, who is or was CFO, now COO of Bitcoin Depot in the US. And he's here to talk to us today all about everything IPO. So welcome, Scott. Great to have you on the show.
Thanks, Hannah. It's nice to be here.
So obviously, Bitcoin's been in the news a lot recently, but just tell us a little bit about Bitcoin Depot. Tell us about the company where you guys started and what's currently what the journey is that you guys have been on.
Yeah. So Bitcoin Depot is a operator of Bitcoin ATMs. We operate just under 7,000 Bitcoin ATMs across the US and Canada. We were founded in 2016 here in Atlanta, Georgia, by our current CEO, Brandon Mintz. And since day one, we've just been focused on bringing cryptocurrency to the masses by deploying Bitcoin ATMs all across the country, in Canada as well. And these kiosks allow consumers to go and insert cash into these ATMs and buy Bitcoin using physical currency.
Wow, so you're kind of bridging the gap between physical currency and Bitcoin,
That's right.
and digital currencies in that instance.
Yeah, that's right. It's a foreign concept to a lot of people that people are still using cash, but it's still a good sized population of the United States and other countries as well that either they're lower income and underbanked or unbanked, or they just choose to use cash. And so letting that portion of the population access Bitcoin is kind of what we're focused on.
So tell us a little bit about the company's journey itself in terms of, it's obviously had some rapid growth. What was the company's journey to IPO?
Yeah, so we were founded back in 2016, like I said, and we've really experienced rapid growth in 2021. So before 2021, we had about just under 1,000 kiosks, and then we deployed almost 5,000 additional in 2021 alone, which led to rapid growth in terms of revenue, headcount, profits across the board. And then once we got through 2021 and 2022, we just started exploring what the right next step was. And that's what led us down to this IPO path and looking for how we could go public and how that could help our growth going forward.
And what does that journey to going public look like?
Yeah, so for us, there's a couple of different paths, right? There's traditional IPO that most people are familiar with, where you go and hire an investment bank and raise capital and get listed on NASDAQ or some other exchange. We went through the SPAC route. So SPACs, for those of you that aren't familiar with it, they're called blank check companies. And so they go public themselves just as a pile of cash, essentially. And so they go public with a couple $100 million, and their whole purpose is to acquire a company that wants to go public. So we partnered with a SPAC who we effectively buy the SPAC and then become the public company after we complete that process. And so that de-SPAC process, as it's called, it starts with just a merger agreement with the SPAC for just any other M&A transaction. And then it turns into a lot of SEC filings with the government. We file a proxy, which is the several 100-page document that describes the business, includes all our financials that have been audited by a large auditor that we use, and all the other SEC requirements around risk factors and other things that investors would want to know before they buy into a public company. And that document gets reviewed by the SEC. They give us comments, and we address those and keep going through that cycle of a process until it gets approved and we get listed, in our case, on NASDAQ.
Now, obviously, you talked about the traditional route, which is obviously via the investment banking. Why did you choose the alternative? What was the reasoning?
Yeah, so for us, right, our company, we're not a Google or a massive company, right? So we have 200 employees, 700 million of revenue. And so we're on the smaller side of public companies. And so for us, it's a lot easier to go this SPAC route because you've got a public company that already exists that you can merge into. Whereas if you go the traditional IPO route, there's a higher bar for a minimum threshold of what you have to raise to be able to make it feasible. And so it's much easier for smaller companies to go through this SPAC route, is what we found.
And talk to us about the time frame. So when did you actually decide, one, to go public, and two, to go down the SPAC route? What was the timings? Was it a year ahead, a couple of months ahead? What was the?
It was a little over a year. I don't recall the exact month when the process started, but it was more than a year long process from when we first started negotiating with that SPAC for the merger until we finally ended up listed. We became listed June 30th of this year. And so it was a little over a year to complete that process. Most of the time being spent with the SEC documents and the review process there.
And why did you decide to go public? Was it something you'd already planned? Was it that timing had just sort of, it just happened, as it were, because you've grown so much, or what was the reasoning?
Yeah, so there's a couple different reasons. So one thing that was unique about our company is that our founder Brandon, from day one, we were profitable, and so he never sold equity in the business, and so he owned essentially 100% outside of other employees that he gave some to along the way. By the time we were going public, so there was no private equity involved or any other large holder of the stock, and so going public gave us a couple new options of how to grow. The biggest being creating that public currency that we could use for acquisitions. And so we're exploring different acquisition opportunities, and having that public currency is definitely helpful for doing those.
And in terms of the preparation to that, you said that obviously you started the formal process about a year before. Was there a few months of preparation even before that, or how far
Yeah,
back
a
did
little
the
bit.
process start? Yeah.
Yeah, a little bit. So we definitely explored it, and we looked at all sorts of different options. But then definitely most of the work happened once we decided we were going down this SPAC route.
So to talk to us about a little bit of the preparation. So what was required from you as a CFO during that process?
Yeah. So the biggest thing, there's a lot of things, but the biggest thing was changing our financials and our audit to being public company style audit. So it's different as a private company versus what we have to do under PCAOB, Public Company Accounting Oversight Board requirement audits. And so the level of detail that the auditors had to go through was at least two times as difficult, maybe more. And so that required us to really change some processes internally, focus a lot more on internal controls, put systems in place, and really expand the breadth of the financial statements that had to get filed with the SEC. And so it was a lot of building out the team, creating those formalized processes, and all that just to get ready to file those documents.
And you obviously mentioned there was quite a bit of change and an increased focus on audit and that impact on the team. What sort of changes did that mean for you in finance?
Yeah, so it changed just the way we had to approach. The finance side, just like accounting, right? So the budgeting process was a bigger focus with the audit involved. The audit got a lot more expensive, and so making sure we're optimizing the process and not wasting dollars there. Um, yeah, it affected the whole team in a lot of different ways, and it was much more rigorous, and it's ultimately a good thing, and it makes sense why it has to be done. But it was a big change for the accounting department as a whole.
And obviously leading that change, that's a big journey to take your team on. How did they handle it? Did you have to bring in new resource to support the changes, or did you upskill the
Yeah,
team?
yeah, we for sure. So we had to bring on new people in the accounting department for the financial reporting side, so we could do the more formalized financial reporting in house. We had to bring on someone in technical accounting to help with the memos and analysis of different accounting methodologies. And then ultimately, like I mentioned to you before we started, we brought on a CFO, and I transitioned to just the COO side. I'd been doing both, and as we went through this public process, it just wasn't feasible to do both. And so, just with my history of the company for 5+ years, it made sense to do the COO seat and bring on someone who has also already been a public company CFO, and transition them into our business and partner with me as we finished up the public process. And we brought him on in about halfway through this SPAC journey that I was talking about.
Wow. So about halfway through, we had a new CFO coming on board to get involved in that. And
Yeah.
how was that transition? Because obviously it must, how did he, maybe ask us, how did he find that transition into role halfway through a SPAC
Yeah.
process?
So, fortunately, he's been a great hire, and really excited to have him on the team. But the transition for him, he hadn't gone through a SPAC process before. And so he had to get up to speed on what I had done and what the team had done so far and what the structure was looking like, where the document was, and just getting all up to speed on how the business worked. But he had been a public company CFO before for another small cap public company. And so he had a really strong understanding of the audit process and what best practices look like. And so he could bring that knowledge from another company into Bitcoin Depot and really help accelerate the team's growth into a public company accounting department. And it was really more for him learning the SPAC side and learning specifics about our business that he had to get up to speed on.
And how did you find that transition? Obviously, having looked after the company up until that point in terms of financials, handing over the reins to somebody new at such a critical time. How was that transition for
Yeah.
you?
Yeah. So, I mean, I wouldn't say handing them over necessarily. We were very much partnering on it. It's something, as you can probably imagine, is very hard to step away from. And I'm even in my current role as COO, I'm always going to be fairly involved on the financial side, just because it's what my background is, and it's obviously critical to the business. So it's really been a good partnership, and I guess slowly I've stepped more and more out of it. But definitely throughout the whole SPAC process, I was still heavily involved, still on calls with the auditors and all of that. It's not like I just washed my hands of it and stepped away from the accounting side.
And how did you, because it must have been nice having that extra resource, having two of you focused to try and get this over the line. So how did you split the work? Obviously you being involved up until you went public.
Yeah, it's a great question. It was definitely very helpful, and the process would have been much harder with just one of us versus both of us doing it. The way we kind of split it, it kind of naturally happened that he worked more with the auditors and on the financial side of the filing, and I worked more with the legal teams and outside counsel on the other parts of the document, and then the investor side. So I kind of shifted more toward the capital raising and structuring on the legal side, and he did the technical accounting and the filings with the auditors. Was how we kind of ended up splitting it throughout the process.
And you obviously mentioned that one of the big transitions was actually producing financials at a level suitable for a public company. What other things did you need to do in order to be able to meet that threshold?
You mean just other things we had to do to become public?
Yeah.
Yeah. So the other big piece was the capital raising piece of it. So we had to have the investors in the SPAC and stay in the SPAC that gave us enough capital to feasibly go public. And so there were a lot of calls with investors explaining the business, pitching why it made sense, and negotiating terms. And so that became a huge part of the process as well.
And in terms of that, how did you learn about that process? Did you have guidance? Did you get advice in to support you through that? Or is this something that you'd done previously, but just not for a SPAC necessarily?
We definitely had good advisors. And part of the SPAC process, there's the other side of the transaction, the SPAC. It's called the SPAC sponsor. And it's a team of, in our case, it was a team of really 4 people that represented the SPAC. And they were former investment bankers. And so they had a lot of experience with this. And that's part of what made us want to choose this specific SPAC, is their expertise on the capital raising side. And so they really played a big role in guiding us through that process.
So you mentioned, obviously, you chose them. Tell us a little bit about the SPAC process, perhaps for those that have never done it. How did you choose how did you find a SPAC, choose a SPAC, etc.?
Yeah, so there's it's easy to find the SPACs. So there's plenty of websites that list all the SPACs out there and which ones haven't found target companies yet. SPACs were very popular 2 or 3 years ago, right? And they've kind of waned in popularity recently. And so there's a lot of SPACs that are struggling to find the right company to merge with. And so we went through all those lists. We reached out to 5 or 6 different SPAC sponsors and just started having conversations, trying to find the ones that we felt would be the best partners for us. And like I mentioned earlier, we really liked their expertise on the capital raising side as former investment bankers, because we knew that part of the process would be critical. And so that's kind of how we selected who was the right partner for us.
So, in terms of when you looked at the different SPACs, you obviously mentioned skill set and capital raising. But if somebody else was going out to market, what sort of things should they be thinking about in terms of looking for a SPAC, do you think?
Yeah, I think it's really important to find a SPAC sponsor that's familiar with the process, like very, very familiar with what it means to go from SPAC to finishing the de-SPAC process and being listed. Um, if you don't find the right sponsor, you could waste a lot of time and a lot of money trying to navigate that process. As I said, it took us a year essentially, and we had SPAC sponsors that had done it previously, and they have an advisory business advising SPACs. So that we felt like they were pretty high up on the expert level of knowing what a SPAC is and how to get it done. And so if you pick someone who this is their first time going through the SPAC process, you could end up wasting a lot of time and resources trying to complete the process.
You mentioned it took you guys a year. Is that pretty standard for a SPAC? What's the typical timeframes?
Yeah, we were probably a little on the longer side, but that's largely because we're a crypto company, and people are likely familiar with the SEC is not the most fond of crypto companies, and so you get more questions, and it's a little more of a complicated process, just given that we have the word Bitcoin in our name and in our business. So I think that's part of what drove it to being longer than some other SPACs.
And in terms of, you mentioned obviously that it can be quite long and drawn out. From your experience and what you know, are there SPACs that don't go public in the end? Does that happen
lot?
quite a bit?
Yeah. So at this, I don't know the exact statistic, but at this point, I mean, over half of the SPACs that are created aren't going public. The process fails and they wind down. Back in 2021, when SPACs were a lot more popular, a much higher percentage were finishing because there was much more capital available in the market to stay in SPACs. But now a large portion of SPACs don't complete the process and they just unwind.
So you mentioned obviously that SPACs are waning in popularity. Any ideas what's driving that trend?
Well, I won't profess to be an expert on this, but from what I understand and talking to other people in it, it sounds like just there's less risk capital in the market, and people are more conservative with their investments. And there's a lot of less quality companies going through the SPAC process. So initially, you got some really big ones like Virgin Galactic and some other companies that went through SPAC processes that were really large, well-known names, and they did really well. And investors that invested in those SPACs had great returns for a while. But then as the SPACs expanded and there were a lot more doing it, you inevitably get dilution in the quality of companies going through the process. And I think you saw some lower quality companies that went through the process and investors didn't do as well on those. And so people just became a lot more skeptical of the SPAC process. Since, as I mentioned, you generally have smaller companies going through it versus traditional IPOs. And so it's inherently more risky. And I think that's really kind of reduced the popularity of them with investors and in the completion process generally.
That makes sense, to be very fair. And I think we all know that it's a challenging market at the moment in terms of capital anyway. So yeah, that additional risk is probably could put investors off potentially. So raising capital is obviously a key part. Was there anything else that was a key part of sort of delivering a successful public go live?
I mean, it's really the three biggest pillars of it were the capital raising, the technical accounting and audit side, which we've talked about a little bit, and then the legal piece, just all the nuances around filing the multi-100 page proxy with the SEC and addressing their comment letters. That was the other big piece of it. So having the right outside counsel on the project that's very familiar with these public company listing processes, that was critical as well.
So as you look back on the process you've been through, what did you wish you knew before you got into it?
That's a great question. I think, I guess I wish we knew how long it would take. We didn't think it would take a year, back to kind of your timing question. And we thought it would be a little less expensive than it was. It was an incredibly expensive process mainly between the accountants and the lawyers. And I think if we'd known how expensive it would be, we might have maybe we would have gone slower and started later and gotten more of this stuff aligned at a slower pace than once we were in the de-SPAC process. Because once we were in the process, you have to just go as fast as you can and get it done because you're spending a lot of cash every day. But if we'd known how long it would take, we could have potentially waited to start later in our company life cycle, and it would have been less of a lift to go public. And then also just the unknown around the SEC's view on cryptocurrency, that made it a much more expensive process as well. And if there was more clear guidance, we potentially could have gone much faster and have been less expensive.
So if somebody is considering going public, whether they're going down the traditional route or via the SPAC route, what are some of the things they need to be thinking out about ahead of that process?
Yeah, I think the biggest piece is on the accounting and financial reporting side, in my view, just making sure that you have the infrastructure in place to support being a public company. It's much more time consuming and intensive than it was prior to being public. And then also just making sure you're building out the right shareholder base. That's continues to be a focus of ours, and it's always going to be a focus, is building out the shareholder base, telling the story, and getting investors interested in the company. Because as a smaller cap company, it's tough to get mind share and get the attention the company needs to grow the investor base.
And when you think about sort of the sorts of things that a business, like getting into the detail around the processes and getting ready to go public, where do you think the weaknesses are in most sort of medium-sized businesses wanting to take that step up?
Yeah, I would say definitely internal controls. Formalizing the internal controls is a process that doesn't feel very valuable when you're in startup mode and you're trying to grow as fast as you can and as lean as you can. But then when you're trying to make that transition to being a public company, you might think you have controls in place and that you have things buttoned up, but when you start documenting everything and getting it audited and reviewed by the outside firm, it's usually not nearly where it needs to be. And so I just think controls is probably one of the biggest blind spots in smaller companies that are looking to take that next step.
And what were some of the examples of the controls or the levels of controls that surprised you as you went through that transition? You said that you thought you had controls in place, but then obviously the
Yeah.
audit was a bit of a wake-up call.
Yeah, well, I think we did have controls in place. It's just a matter of documentation, right? So you've got a
Yeah.
lot of formalizing the documentation and review process and documenting that review process. And just if we use an example of accounts payable, just an easy one, right? We have obviously someone's reviewing and approving the payments before they go out, but we don't have there might not have been a checklist or a formalized written description of that process, right? You just know that, hey, you were trained, someone reviews it and someone approves it and you pay the invoice, right? But adding that formal documentation of it, that's the change that you don't really do when you're going through that startup growth mode.
And what was in terms of actually getting those processes involved, did that fall on you and the CFO to get those in, or was it a real team effort to get processes
It was no, it was a
documented?
team effort for sure. I mean, it wasn't me primarily. It was mostly our new CFO and the rest of the accounting team. And then we also engaged outside accounting firms to help us, just because there was so much to document and we have to move quickly. So we had third parties helping us as well.
So a massive shift for you and the team over a space of 12
Yeah,
months.
for
And
sure.
and in terms of that transition, how did the team find that transition from startup fast growth to public company reporting? What was that like for them?
Yeah. So if we're talking about the accounting team specifically, I'd say it was definitely a painful process. You have the way you've done things for years that have worked and it's going fine. And then you have the external auditors come in and say, well, you don't have it documented, or you haven't dotted this I or crossed this T, and so it's not done. And so it's just much more time intensive than the process was before. And so you kind of feel like, to a degree, as an accounting team member, that you're taking a step back because you're going so much slower now because there's so much more formality around the processes.
And how did you balance, or how did you support, I guess, the team through that change? Because that's obviously a big challenge, especially the sorts of individuals that you would get in a fast growth startup. That shift to public company perhaps isn't as exciting as the fast growth, or was everybody on board with the
Yeah.
need for paperwork and process?
Yeah, I think it's a different kind of exciting. Yeah, it's definitely different than the startup environment. It's now exciting in a sense that you were involved in taking the company public and part of that transition, and it's a great experience for a lot of people. Um, so I think it's that mindset shift, right? Around, yeah, we're growing and it's a good thing, and this is part of what comes with that growth. But it's something great for everyone to experience and really learn what the public company process is like and be a part of implementing those changes.
And in terms of setting that mindset, how did you guys approach it? What was you obviously knew going into this that it could be a change, perhaps not as big as you thought it was going to be, but you knew there was going to be a change. How did you guys prepare the team for that shift?
Yeah, I think it's really just making sure we talked about how excited we were and how great it was for the company, and getting people into that same mindset of this is a good next step for the business, and explaining to them how they'll be a part of it and how they're contributing to us taking that next step. So kind of getting that team mindset and everyone buying in to this is great for the company and this is how I'm involved in making it happen.
Awesome. And you mentioned bringing on some new talent. Did you purposely look for talent that had worked with big companies as you were making this transition, or were you kind of open to different skill sets?
We still wanted people from smaller companies. I mean, ideally smaller companies that had been public, but if we went and hired someone from a massive company, they would be overwhelmed potentially at the lack of resources compared to what they were used to before. And so if you're the expert, if you're a financial reporting person at a massive company, you might handle one tiny part of the overall picture of financial reporting because you have dozens of other people helping you. And you're an expert in that one specific thing, which is great. But if you're going to come and do all the financial reporting for us, it's a different ask. You can't be that deep of an expert on every single piece, but you have to know all of it well enough to get the job done. And so it wasn't someone from massive companies. We were really looking for people from smaller public companies that had experience kind of owning their whole process themselves.
And tell us a little bit about how the reporting requirements changed as you made the shift to go public.
Yeah, well, before we were public, right, I mentioned our CEO owned the whole company essentially. And so it was really just, we got audited for our lenders and for people like our banks so they could see our audits. But it was, let's say, a 15 to 20 page document. And now it's 100 pages, right? Because there's all these public company requirements in the financial reporting. And there's not wiggle room in exactly what you want to show or not show. But when we were private, there was a lot more flexibility because we obviously had close relationships with the people, the stakeholders that wanted to see the audit, and it was more collaborative. And so we did what was efficient. But once you're public, there's none of that. It's exactly what the requirement says, and there's no optionality.
And in terms of how you position yourself within that financial report, did you find that there was a different skill set in that, as well as obviously the extent of the reporting?
Do you just mean like the expertise we need to have to do it?
Yeah,
Or what do
did
you?
you find you needed different skills in order to produce
Oh, for
the level
sure.
of reports?
Yeah. Well, so one of the big changes is when you're doing a private company audit, the auditors can help prepare the financial statements, right? They can put it in the right
Mhm.
format. They can fill it in based on the data you give them. But when you're public, you have to create the whole document yourself. They can't help at all. And that was one of the biggest shifts in bringing in that financial reporting person onto the team. Is we didn't have to prepare them ourselves before. We would take the financials out of our accounting software and we'd give it to the auditors and say, here's the financials, and put it in the format you want to put it in. But once you're public, you can't do that. And we had to hire a financial reporting person, get new software to do the financial reporting tools, and then they would audit it once you finish. And so that was just a big change in the process.
And in terms of structuring your financial reporting, did you have to think differently in terms of, obviously there's some compliance reporting requirements, but in almost how you told the story of what the business has done, over the past year and what it plans to do?
Yeah. Yeah. So, I mean, that part of our quarterly earnings calls and reports to investors and investor decks, all of that was new. Prior to being public, we didn't do any of that because it was kind of go back to the same thing we've harped on is the single owner. And so it was all much more conversational and like in updates frequently versus waiting on the financials. Right. Whereas now, to your point, we put out the investor decks, we do the earnings calls, you have a lot of messaging around all of it. And it's much more of a orchestrated production than it was before, where it was more casual conversations.
So tell us, I love that term, orchestrated production. That's a really good way to describe it. So talk us about that piece. Like, how do you make sure that everything's aligned? What's the process you go through now as a public company?
Yeah. So now we're going through the quarterly review process, right, to do our quarterly financials, and you have to obviously work with the auditors to get the numbers done. At the same time, you're working on the press release that's going to get released on the same day. That's going to talk about these were our results. This is why they were the results. This is what we're excited about. And then you're also working on the earnings script because we have to do an earnings call that same day also, where we spend 15, 20 minutes describing the results, what we're focused on going forward, what our guidance is for the rest of the year. And then also the legal part of the filing with the SEC to drop the financials in and update all the disclosures with the public filings. So all 4 or 5 of those things have to be in lockstep and timed up together so that on the day we finish the audit or the quarterly review, we're ready to file all of that, do our earnings call and release our press release, and then start answering questions from investors as soon as it's filed. And so it's a lot of coordination to get all that done on the same schedule.
And you mentioned obviously having to answer questions from investors. How much prep goes into that part of the process? Obviously, there's a lot of stuff in the press release and reviewing, but how do you manage that part?
Yeah, I think a lot of preparation. I mean, a lot of it comes from doing the press release and doing the financials. You kind of naturally are preparing for the investor questions because you've spent so much time in the weeds getting the numbers correct and thinking about what you're going to provide to the public. But yeah, we're always talking about what kind of questions do the investors have and how do we think we can address them best.
And did you, as you were going into that public filing piece, did you always know that you were going to shift out into perhaps the COO role? Or was that something that happened as you went through, like a realization that you needed extra resource?
I think we always knew it would happen well, I say always, maybe not always, but for at least several months to a year leading up to the SPAC process, we knew it was too much to do both. We didn't know exact timing, and we were prepared for it to take a long time to find the right CFO for us. But we did know it was coming. It was just going to be too much as we continued to grow at the rate we were growing.
And so when you think about obviously the change in requirements, I guess, for a CFO, what do you think is really important to prepare, as did you know that you were going to have somebody else coming into that CFO role when you went into the SPAC process? Or was that something you were preparing yourself to do and be that public face of the company
I
from a
think
finance perspective?
we knew we were going to look for someone. We didn't know how long it would take to find them.
Yeah.
So as we started the SEC filing process, I was still the CFO and was prepared to be throughout the whole process if needed, because we weren't going to rush hiring someone that might not be the right fit. Uh, and so yeah, that was on my mind is being ready to be that person throughout the whole process. But I did know eventually we would find someone else that could help me.
And what do you think is key as you're transitioning? What kind of skill sets do you need as that public, as that public CFO that perhaps you hadn't had the opportunity to develop as much as in the private sector?
Yeah, I think the biggest one is the investor relations piece of it. So that's one you don't really have in the private sector, but in the public side, and it's a role I'm very much still serving in the COO piece, but it's managing investor expectations, meeting new investors, getting analyst coverage for the stock, which has been highly important for us, and just getting our message out there, where it wasn't something we were concerned about at all back before we were public.
And how did you develop your skills in that area? Did you have a mentor that took you through it, or was it something that you
Yeah,
just naturally developed?
it's a combination of both, but I'd say having the mentor and the SPAC sponsor that we talked about earlier, their skill set's been very helpful, and just walking us through those initially and doing dozens and dozens of calls. You just kind of naturally build it up over time after you've gotten some mentorship from those people.
And what did you, in terms of that investor relations, what do you wish you knew before you started doing the role?
Um, I think there's just a lot of importance on how you frame the story, and how you're concise and give the right level of detail for the right audience. So different investors are going to have a different level of knowledge of Bitcoin, for example, or a different level of knowledge of Bitcoin ATMs more specifically. And making sure you're starting at the right place for where the investor is to get them up to the core parts of the story is really important. And I think it just takes practice and really understanding your business and the spectrum of how much or how little other people might know about your business when you're starting those conversations.
So understanding the starting point and knowing your audience, which I think anyone that works in
Yeah.
investor relations, that's a key skill to develop. So in terms of next steps, obviously taking that transition into COO, what did you find was the hardest thing about transitioning into that COO role?
Yeah, I'd say the hardest part, since I was kind of doing both before, it's not like the COO role was totally new. The hardest part is stepping out of the CFO seat, and stepping away from some of that day to day process, and trusting the person you hired to do that without your involvement. That was the harder piece than things I was necessarily taking on in the COO side specifically.
I can completely understand that the letting go is harder than the taking on
Yeah,
necessarily.
yeah.
So, for anybody listening to this, perhaps is looking at going to IPO, whether it's via a SPAC or in a more traditional method, but what would you recommend in terms of preparation? What do you think they should be thinking about? What sort of skills do they need to be building within their team as they prepare to go into that process?
Yeah, I think the overarching theme is preparing the accounting department and getting that team built out and in a place where the transition's easier from private to public, but specifically building out internal controls, the documentation of those controls, and then the financial reporting, and just having the processes in place to really own those financial statements and have a streamlined financial reporting process is really helpful before you start the process of going public.
Oh, absolutely. And obviously, as you go through this process, we talked a little bit about the SEC's opinion of Bitcoin, but were there any other challenges because you come from such a new industry, as it were?
Yeah, the other challenge was definitely with investors. There's already a small subset of investors that are even open to crypto, and so it just limited the pool of people that we could find partnerships with, and that's just a challenge that's inherent in new industries like cryptocurrency still.
Amazing. Well, thank you so much, Scott, for taking us through some of the challenges, and also it sounds like an excitement in actually that going public process. If anybody listening here wants to learn more about, whether it's the SPAC process or about your organization, what sort of resources would you recommend?
Yeah, for definitely for learning about our organization, you can check us out at bitcoindepot.com. And SPAC resources, there's dozens all across the internet. If people want to search SPACs, you're going to find a lot of interesting stuff out there, I'm sure.
Fantastic. Thank you so much, Scott, for joining me on the podcast and for sharing your experiences with us today.
Thanks, Hannah.